Hello everyone, my name is Max Monahan. I am a future Portland, Oregon real estate agent, and today we will be talking about why knowing the location where your property is located is extremely vital to a successful real estate investment. Knowing if the area you're thinking about investing in has high crime rates or if the price to rent ratio in that neighborhood is good is very important. In real estate, there are generally 3 different types of neighborhood/building classes ranging from A to C. Here's a quick summary of each class. An A-class neighborhood is a place where there are many new buildings/developments, highly sought after schools/school districts, generally wealthier people, are in a great area situated close to nice restaurants/leisure activity areas. They have wealthy occupants who have well-paying jobs and want to live in a home to reflect that. An A-class building is a building where either it's less than 10 years old or has been greatly renovated in the past 10 years. It's a place you would dream to live, hardwood floors, luxury furniture, granite countertops, pointless but also very expensive art, the whole package. A-class neighborhoods and buildings are generally difficult to invest in if you're looking for cash flow. Yes, the tenant will probably be better when compared to other classes, and you won't have as many maintenance issues due to everything being relatively new. However, the property itself will probably be extremely expensive. If you don't have a ton of money to spend on the mortgage, you're going to have a difficult time finding solid cash flow in these neighborhoods and buildings. I would recommend going to the next class. A B-class neighborhood is one where the average property is around 25 years old and is pretty well kept. The schools and school districts are pretty good, the general population is middle class, and it's in a decent area close to amenities. B-class neighborhoods have mostly working/middle class, blue-collar, working people in them, and around half of them actually rent. A B-class building is a building where it's around 20 years old, age range of anywhere from 15 to 30, and probably has a few minor upgrades done to it, although nothing major. Anyone would be happy living in a B-class building. High-end laminate floors, tile/laminate countertops, stainless steel appliances, a very rental-proof property. B-class neighborhoods are typically the perfect neighborhood for typical real estate investors. Home prices won't be too high when compared to the A-class, but you still have good tenants, and you should have decent cash flow. B-class properties are great, but that's what you should be aiming for with your properties, not having the work already done for you. Because B-class properties are so rent-proof, lots of investors will look for and buy these properties. However, I think your best bet is to invest in the B-class neighborhood, but in a C-class property. A C-class neighborhood is one in a lower income area with the average property being around 30 to 40 years old. The schools and school districts aren't great, general population is lower class and isn't near any great amenities. C-class neighborhoods will mainly have lower class people on lower wage jobs. A C-class building is a building where it's around 30 years old and needs a bit of renovation done to it. It might have a bit of an overgrown yard and needs some updating visually. Definitely needs a new paint job, and potentially an entire overhaul of the kitchen and bathrooms. You'd only live in a C-class building if you were forced to. It's got beaten down laminate and carpet floors, old appliances, and clearly an old kitchen. The price of the property will probably be pretty cheap in comparison to the other classes because it's so old and is a definite fixer-upper. These types of properties are perfect to perform the BRRRR method with. I would recommend trying to find C-class buildings in a B-class neighborhood, then renovate the property to become a B-class property to get the best bang for your buck. These classes are obviously not legally defined, but should be used as a quick generalization of an area or property. To have a good idea about the neighborhood you want to invest in though, you shouldn't look at generalized classes. You should talk to the people in the neighborhood and the people who invest in the neighborhood, as well as spending a bit of time inside of it. On top of this, you should do your research on a few key factors that are important when considering a neighborhood. First, let's talk about schools. What school district the neighborhood/what public high schools are near the property is extremely important to the neighborhood and property, especially if you're going to work with single-family homes. For families with kids, a good public high school near where they live is extremely important to them, and usually when you're near good schools, tenants tend to stay longer, and the property rents for more. To find out what schools are near your property and whether they're good or not, either ask people around the neighborhood or look online on a website called greatschools.org. And I'm not sponsored by them, but great schools rate schools on a scale from 1 to 10, 10 being the best and 1 being the worst. If we are looking to invest at schools above 7, you should be in a great neighborhood in terms of schools. although always be sure to read the individualized parent reviews. The next point I want to get onto is crime. Areas with high crime rates are obviously a sign that a neighborhood maybe isn't the greatest. When you see that an area has a higher crime rate compared to most other parts of the city, you should probably stay away. There are many different ways to look at what the crime rates in different neighborhoods are. I would recommend looking online. A great website that you can look at to find crime rates in different parts of the cities is called citydata.com. Again, I'm not sponsored by them, but all the links I mentioned throughout what I'm talking about today will be linked in the description. It shows in-depth data about crime rates in cities on a very user-friendly map. Definitely check it out. Population growth is another huge factor. When investing in rental real estate, you'll want to find an area with a growing population. This is a sign of good job prospects and places that people want to move to. Plus, when there's a low supply of houses with lots of people wanting to move there, house and rent prices increase. The best place to measure these numbers is to look at the US Census Bureau. It'll show you the population data for specific zip codes, and you'll be able to evaluate how much the population is growing. To piggyback on the previous section, you're also going to look for an area with more jobs being created, and these jobs being diversified, not just in one sector. As you could probably assume, if no jobs are being created and more jobs are being lost, most people aren't going to move there, and some people will even move out, leaving rents and property prices in the area to plummet. One way to look at population figures is through a website called bls.gov. It tracks job-related statistics and trends. It's fantastic for looking at general population growth, unemployment rates, job trends, and a variation of jobs being created. The last one I'm going to talk about here today is convenience. It's a pretty simple one to understand. People will want to move to areas close to places they're going to go. Most people will want to live close to places they're going to visit regularly, especially in major cities. If people want to get around biking, they're going to have to live near areas where they want to go. A great way to check where the convenience of where a property is located is called a walkability score. It'll give a rating out of 100 based on how convenient it is to walk to parks, supermarkets, restaurants, shopping areas, schools, etc. Now thank you all so much for watching, and I hope you learned a thing or two in this video. I'll be releasing a video later this week about a real estate related topic, so definitely stay tuned for that. Don't forget to like the video if you liked it, and be sure to subscribe for weekly real estate related content. See ya!